Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Monday, June 15, 2009. We begin today's coverage with a look at the euro-dollar pair, which fell heavily in favor of the greenback. The pair broke a short-term line of support on Friday, and today it extended its losses, falling from 1.40 to start the session to 1.3750, a 250 pip decline. The euro was battered by reaction to the ECB's biannual stability review, which said the eurozone's financial sector is likely to face a new round of tests as more corporate defaults, deteriorating credit conditions, and falling asset prices add stress to the system. The greenback, meanwhile, was boosted by comments from the Russian finance minister that there were really no clear alternatives to the US dollar as a global reserve currency. The euro-yen saw a steep plunge as well, falling below the upward sloping channel established the past 2 weeks. In overnight and New York trading, the pair fell 300 pips to test the area around 134.50, which is a low that goes back to the first of this month. The main European stock indexes were off 3%, adding to the sense of risk aversion in currency markets. In the US, the Dow Jones index was off 200 points, which extended the sense that investors are now assessing data pointing to a slow recovery in the global economy. In addition to the greenback, the yen was a big gainer today. Its performance can be demonstrated with the popular carry trade favorite, the Aussie yen pair. In today's trading, the pair shed all of its gains from last week, testing the 77.30 area following a 230 pip slide, with most of the losses coming during New York trading. As global stocks faltered and commodity prices, including oil, slid, the US dollar-Canadian dollar pair rose in favor of the greenback. The pair broke above last week's high near 1.13 to set a new 3-week high near 1.1375. A strong appreciation of the Canadian dollar is adding pressure to the country's economy as it hampers the country's exports and limits the amount of tourists coming from the US. Data from the US showed the Empire Manufacturing Index fell to negative 9.4 for the June period. New orders remained negative and shipments fell 6 points, though some of the more forward-looking indicators in the survey showed expectations that conditions should improve over the next 6 months. A second release showed that international purchases of American financial assets grew more slowly in April as China, Japan, and Russia cut back their demand for US Treasuries. Total net purchases of long-term equities, notes, and bonds rose a net $11.2 billion, compared with buying of $55.4 billion in March. In the Eurozone, meanwhile, the economy lost 1.22 million jobs in the first quarter as companies responded to tough conditions by cutting staff and output. That was a 0.8% decrease in employment compared to the fourth quarter, and it was a record drop, though the data series started only in 1995. Tonight, Australia releases its meeting minutes, and the Bank of Japan will conclude its interest rate meeting. Overnight, Switzerland posts its industrial production, the UK reveals its consumer inflation figures, and Germany posts its ZEW economic sentiment. Tomorrow, the US posts its producer prices, data on building permits and housing starts, and figures on industrial production. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com. and happy trading.